That said, in, call it the last 2 years, we've seen the growth of centralized crypto companies. So Athena, Hyperliquid, where the user has clearly said, we don't mind if there is a centralization feature here. We actually get a better experience.
Welcome back to the Bitcoin.com live stream. This is Frederick. I've got my co-host here, Graham, and we've got our guest, Sya Kantorovich, who is the CEO and co-founder of August Digital. Sya, welcome to the show.
Thank you so much for having me.
How's your flight to South Korea?
It was long, uneventful, but that's a good thing in crypto. So we're very happy to be here.
Yeah, so it's not your first time in Korea, like you mentioned off camera. But I was curious about your history in crypto. How did you end up being the co-founder of this, looks like a very interesting on-chain brokerage firm, August Digital? How did you find your way to crypto and to, looks like, institutional finance?
Yeah, so my first exposure into crypto was in 2016. I got exposed because one of my former bosses was from Venezuela. And at the time, in order to buy certain tech specs or growth in items, they used Bitcoin to transact. And so that was the first reason I got introduced. And I'll be honest, when I first read the Bitcoin white paper, it went very much over my head. It is very mathematics heavy. And so I remember thinking, all right, this is way pre-ChatGPT days where you could just plug it in and be like, simplify this for me in a sentence or two. And so I actually really connected with the Ethereum white paper and this concept of, proof of work and the ability to, bring a lot of the products and services in a digitized way. And so that's how I got into crypto. I made the full transition into making crypto my full-time job in 2018 at Pantera Capital on the venture side of the business, and then was one of the early founding team members of FalconX, a crypto prime brokerage in 2018. Was able to scale that company through its Series D. I got very, very lucky and left a month before FTX happened. And so timing truly is everything in the space, and really wanted to focus on how to bring a lot of this technology on chain. And so that's how August was born. We had a lot of concerns with the opaqueness of CeFi. Today, it's very hard when you transact, not only with, a crypto company that is an on-chain, but really any company today, because you don't know what their liabilities are. You can rarely look at their balance sheet and you have no idea who their counterparties are. Are they engaged with the Three Arrows? Are they engaged with someone else that perhaps you don't want them to have exposure to? And so our idea was, how do we kind of bring some of that technology on chain so people have trust again, but also have a good user experience? And we can dive into that in terms of what needs to be decentralized versus what should probably stay more centralized.
So perhaps taking some of the lessons learned from the FTX downfall and applying those in order to protect investors.
That's exactly right.
Okay.
That's exactly right. Yeah. So we've been very excited to do that. And it's interesting because when we started the company in 22, everyone really still was focused on how do you make something completely peer-to-peer and fully decentralized. There's this kind of, I would call it anarchist movement in crypto where you're so focused on, kind of the blue chip names. Aave is one of the larger ones that's still very much around. And so how do you make things peer-to-peer where you don't need a centralized entity to be making decisions? That said, in, call it the last 2 years, we've seen the growth of centralized crypto companies. So Athena, Hyperliquid, where the user has clearly said, we don't mind if there is a centralization feature here. We actually get a better experience. And so now we're kind of in this really interesting, form of CeFi, DeFi. And we've also seen a lot of the centralized finance players come into DeFi as well.
From the user's perspective, maybe they're more interested in just the idea of permissionlessness rather than, as long as they get that permissionlessness, they don't necessarily care that it's decentralized.
That's exactly right. And so, you're seeing that put also pressure on traditional markets where, for example, with the CFTC news this morning, or even with the news of some of the, large trading exchanges having to move into 24/7 trading because people also just want the access on weekends. They want access during banking holidays. And so to your point, it's more of what is defined in permissionless and what is defined in 24/7 access. And then what really needs to be decentralized in order to still maintain that good user experience, but also the safety, the trust, and the counterparty risk.
Yeah, I think what you have is in the beginning you do have the libertarians, the anarchists in crypto. You came in 2016. That was still that time when everyone was, we're moving from this centralized culture, right? Like
Perhaps idealistic.
yeah. And so we're trying to make sure that everything is decentralized, that it meets those core values of like peer to peer, and more almost like egalitarian type of decision making. But once we started going mainstream, or we started trying to attract the institutional money, then we realized that, okay, it can't work, it can't scale in the way that we hoped it would without some kind of centralized entities taking part in the ecosystem. That's kind of how I see it. So you worked at Pantera, which is that Dan Moorhead?
That is, yes.
Yeah, so that's a big, I guess, hedge, maybe not a hedge fund, but crypto investment fund, and they kind of have their fingers in every pie almost in the crypto world. How did that affect you?
Yeah, I mean, look, Dan Moorhead is one of the sharpest people in the space, without a doubt. He was one of the largest purchasers of Bitcoin, who really focused on making it mainstream. Their Bitcoin fund, I believe, was founded in 2012. And so, it really goes to show that it takes a lot of courage to take on that level of risk, to commit to something for that long. And Dan Moorhead really was singing the Bitcoin and then the crypto narrative, and was one of the, core voices for the industry, that I think did a really good job of communicating exactly what crypto, the benefits of the technology, for a number of years. And so, they've obviously also been very active in the digital asset trading space, and, all the DATs that have happened most recently, and very large purchases there. And so they've done a fantastic job in staying at the forefront over the years. And that's a very hard thing to do, because the industry changes all the time. So it was a tremendous learning experience.
And so I used to work for a custodian. So we used to do, custody, banking, and prime brokerage. Maybe you can explain to the viewers what a prime broker does and what an on-chain prime broker does.
Sure.
Basically, what does August Digital do?
Yeah, of course.
Yeah.
So there's a few core pillars, as you mentioned, with prime. The first is custody. The second is trading. And then you have borrow lending. And so, for us, the concept is, how do we create capital efficiency? Now, that's a term that's also used in the space quite a bit. DeFi today is very capital inefficient because everything is pre-funded, right? You have to have the funds in the account for the peer-to-peer transactions to work. And so that isn't always the cheaper option. And so the concept for us was, how do we bring cheaper tech and cheaper user experience, but still have the peer-to-peer trust in a way that's scalable for institutions that are trading in, call it $5 million clip sizes and higher. And so today we're the only place where you can trade over the counter. So OTC, spot, derivatives. You can trade your DeFi positions, and you can have exchange positions all cross-margined. And what that really means is, let's say you have a Pendle position or a staking position in a custom smart contract that we've built, which is our custody solution. It's non-custodial today, so you hold the keys for it, but it is secure. And so today you have your on-chain position. You get a loan from us. You can trade a derivative against that. And then let's say you also have your exchange position with us. And so we look at the equity of all those three things, and we give you credit based on those three things. And so today, that's the only place you can do that. In traditional finance, if let's say you have a position at one of your banks, let's say Goldman Sachs, JP Morgan, they will not, if you go to your Goldman Sachs, rep and you say, hey, can you give me a loan against my JP Morgan position? They'll say, absolutely not. And the same thing if you have a position with, let's say, Galaxy or Binance, and you say, hey, can I bring my OKX position and you give me leverage on that? Absolutely not. And so the beauty of DeFi is composability. And regardless if you compete with someone, you can make all these positions composable. And so for us, it's like the big unlock is, how do you actually get those positions to speak to one another in one place?
Yeah, it's all very interesting. And, you talk about capital efficiency, and I'm thinking about how you have these over collateralized loans, where you actually have to give more collateral than the money that you get back as a loan, like vastly more collateral. So that's is that would that be one definition of capital inefficiency?
Yeah, that's a great question. Yes. So it depends on how it's structured. If we, use terms like on platform and off platform
Right.
today, and DeFi is structured as off platform. And so the reason it has to be so over collateralized is because you don't know how the loan proceeds are used. And so there was a case, a few years back where, the Curve founder, for example, was using an Aave loan to go and purchase home equity. And so, had the lenders known that, would they have charged higher rate? Probably, right? And so, from our position, it's like, how do we create the on-platform experience where the LTVs can be more competitive and it doesn't have to be as over-collateralized because you can actually see how loan proceeds are used
Right.
and use that for the net equity of the total position. And so, for us, we've actually been able to find, even under-collateralized opportunities just because we have control for liquidation across all of the different venues where a user is deploying those funds.
Would you be able to give an example of a situation where you can actually have an under collateralized opportunity?
Absolutely. So, let's say you have an on-chain position across, let's just use like a staked ETH example, and you would like to have a loan in order to, extend and start trading on, call it, let's say, an exchange like Binance. As so long as we have access to liquidate the positions on both sides, then you can see a world where we take the Binance position as equity for the loan. And so, for example, you won't need to have significantly more staked ETH in order to get the loan, in order to then trade on exchange. We can use both the exchange position and the staked ETH position as a form of your equity, and we can, give you a much more competitive LTV.
Interesting. Okay. So would it be fair to say that a big part of the work you have to do is establish partnerships, relationships with some of these centralized exchanges, or am I misreading that?
No, you're absolutely right. And so, today you see that quite a bit in terms of the work that, custodians do, for example, Sifu or Zodia Markets. Today they do off-exchange custody. And so they have those partnerships with the custodians in order to, give you that same leverage on exchange, even though funds are stored outside of exchange. We do the same, but on the risk side and risk calculation side in terms of, making sure that we can calculate the proper LTVs. And so a lot of the work that we do, and I'm glad you mentioned this, is really, Oracle and asset underwriting, and then making sure that everyone's aligned with the kind of standards that we've set for those asset underwriting calculations.
So we don't, and the market doesn't end up in a situation like we had with 3 Arrows Capital, and just nobody knew where the money was, nobody knew who was lending to who, and it just resulted in this massive collapse.
Right. And ideally, you don't have someone pledge the same collateral 10 times when the collateral doesn't even exist. So that's exactly right. That's exactly right.
Okay.
And what kinds of clients do you have? So from what it sounds to me, you're more on the institutional side. But what's your clientele? I guess who's your target customer ideally?
Sure. So our clientele today is, as you mentioned, predominantly on the institutional side. That said, in 2023, we actually had our institutional clients use our technology to launch more user-based, user-friendly products under our retail brand Upshift. And so that is our Vault as a service product. And today you see tokenized yield strategies, and that is, accessible depending on your jurisdiction, really to anyone. And so that is same, security, underwriting, and technology underneath, but the strategies are democratized for users and composable across the ecosystem. And so it takes the institutional breadth, but gives, retail access to those same tools to use across the space.
And what kinds of companies, like when you say institutional clients, what kinds of institutional clients are coming to you guys and saying, hey, we need your services? It looks like, you're doing this really well or that really well. I'll be interested in knowing
Sure.
what companies come to you guys.
Right. We were joking about this before, where institutional the term institutional is like nomenclature we've been using for a very, very long time. But for us, we define it today as, our prime client is the crypto native fund called 150 million AUM on average. And they are predominantly trading across different crypto venues. Now we are expanding into the digital asset treasury space. And so that's been very exciting, where a lot of these DATs, for example, have made purchases of, let's say, ETH, Bitcoin, Solana. They want to stake those assets, but now they want to run different strategies for it. And we have the institutional technology for you to be able to do that in a secure way on chain. And so we've been able to expand into, a lot of these real, we call institutions, just based off of size and breadth. And also the asset issuers. So, we work closely with, call it the BlackRocks of the world. And we consider those to not only be the core institutions in the space, but, I think more broadly, one theme that I've noticed is the crypto space has constantly tried to bring institutions to DeFi. And what has clearly worked for us in the last year is bringing DeFi and the infrastructure that works into traditional finance. And so, we've been able to bring different picks and shovels to some of these asset issuers, to some of these, large traditional infrastructure providers and say, here's what you can or can't use. And going back to our question of, what's fully decentralized and what's more centralized, the centralized aspect has been a lot stickier, to say the least.
Can I just follow up on that, the point you made about DATs? So are you saying that some of your clients are actually digital asset treasuries they're looking to optimize the yield on the digital assets they have in their treasury, and you're actually able to help them do that?
That's exactly right. That's exactly right. The issue today is, DATs have an attention issue where there have been so many that have come to market that the differentiation has not exactly been very clear. Obviously there were the first that came to market and they captured a lot of attention. But for all of the following ones, if you're just holding ETH and you're just getting the staking rate, at some point that is truly not differentiated, right? And so the next question is, all right, how do we create, differentiated strategies? And we're very, very clear and they're institutionally managed about what the risks are. How do we create these strategies that can then actually differentiate myself from, let's say, the other 5 ETH digital asset treasuries that exist out there, or the other Solana ones, or Bitcoin, you name what it might be. So that's exactly right.
Yeah.
And so people are looking at things like cash carry, basis, leverage looping. And, I would say we've seen really phenomenal asset managers who really understand how to mitigate those risks. And then, as you do in any market, I've seen ones where, it's been a little bit more concerning to see how those strategies play out over the next 6 months. So we'll see.
Well, that's the question that I wanted to ask about the DATs, right? So from your perspective, your vantage point, do you see these extra yield, I guess, chasing strategies? Do you see them as well managed in terms of risk, or do you foresee some of these DATs collapsing if the crypto that they're holding falls below a certain value, right? Because they typically you borrow money and then you buy crypto with the expectation that the crypto appreciates more than your cost of capital and so forth. So when they're holding that crypto and they start getting into these more exotic activities with that crypto, we saw that in 2008 when they get too exotic, right? And then people don't even understand what these assets are, these strategies are, and then the contagion just explodes and affects people that had no idea that this was happening. And you kind of compared that with the 3 hours thing. What's from your vantage point? Oh, dry throat today. Your vantage point, do you see the risk management being well executed and implemented, or not? Because you're into risk management, right? So what are your thoughts about the DATs?
Not all DATs are created equal, and not all protocols are created equal, not all companies are created equal, and not all management teams are created equal. And so I absolutely foresee that a DAT is going to blow up, and it's going to unfortunately be really, really bad for the rest of us who are doing things in the right way, who are, crossing our T's and dotting our I's and have the right teams in place to manage that risk. But not all DATs have the right management teams in place. And it is very concerning. I think we've seen, the market definitely direct money towards DATs that have better management teams, because at the end of the day, that is who you are underwriting. You're underwriting the liabilities of the company, but you're predominantly underwriting the management team. And so, I think the market has done an okay job of, allocating funds into the right management teams. But that said, not all of them are phenomenal risk managers. And so, I think we'll see if the market, as you said, continues to go up and to the right, and we don't get large price swings. Then, I think the risk will be somewhat mitigated. But not all managers are good managers, and when you do get high volatile events and funding rates blow out and lending rates blow out, you start to see the cracks really do start to show.
So I guess we can assume that, or we can have a higher level of confidence that a DAT that works with you guys is going to have a better level of risk management. So my question is, do any of such DATs, do they disclose that they're working with you? I'm asking that because, like, if you're an investor, a retail investor, and you're looking at which DAT should I invest in, maybe that might be something you actually would want to look at, like who are they working with for risk management?
Absolutely. Yeah. So all of the DATs have to, go through proper disclosure. So all of the infrastructure providers are disclosed. And I'll actually give you a data point for this, going back to some of the risk management. So there was a very large staking provider who had to go offline due to a hacking risk, and then actually took the staking ETH withdrawal queue from, from a couple of days to over 45. It was 45 days is, probably some of the largest queues we've seen in the last couple of years. And so if you are leveraged looped into an ETH strategy, it suddenly took you from 45 days. It's 45 days every time you unwind the loop. And so you could see a world where you suddenly get multiple hundreds of days for you to be able to withdraw ETH from your loop. And so if you did not properly manage that risk and suddenly you have large withdrawals from your DAT, you are not going to be able to facilitate the withdrawals in time, and you'll probably have some sort of run on the bank. And so what we were hearing from DATs is that they had borrow rates against these that used to be 50 bips, and that borrow rate spiked to 5%. And so again, if you are not managing, your rate relative to the ETH staking rate, then you suddenly got blown out, and that rate, amplified by, call it 10 loops, can start to hurt very quickly. And so, I think that is where if you go through the disclosures, you're looking at the management team, you're looking at the infrastructure providers, and you feel comfortable with underwriting, folks based on their experience, then, a lot of people we saw have seen this before. It's not the first time this has happened, and managed the risk well. But for some people, that might have been the first time you got blown out. And at that scale, it can mean a lot of different things.
Yeah. So one thing I noticed on your site, you've got the SPAN framework, that's the CME framework for managing risk. And I was just reading through it. I mean, I've heard about it. I don't know exactly what it is. I just kind of read through it. Is this a standard for like crypto prime brokers? And I'd asked about, I was curious about how other prime brokers in the space operate. Is adopting something like SPAN standard for crypto on-chain prime brokers, such as yourself and like the Coinbases and the Krakens and exchanges that do prime brokerage? Is that?
Yeah, it's a good question. So it's not standard yet. And the reason is, the CME SPAN methodology is fantastic. And it's, very much an industrial standard. And obviously it looks at things like volatility and price over time. The issue with crypto is it is significantly more complex than traditional finance in the way that different assets are priced, especially if there are pairs of assets. So for example, in crypto, let's say you're providing liquidity into a pool, and the pool has 3 assets. How do you underwrite, the price of each of those 3 assets? And so we do a lot of work to calculate, for example, the asset weight of every pool. And then based off of that, the price over the course of volatility and size and a risk ladder. And then running that, every couple of milliseconds as well to adapt to any market movement. You also look at on-chain liquidity, right? So, we take the more conservative approach by assuming you can only liquidate on-chain, even though we have CeFi integration. And that way it gives you far more conservative LTVs and discount factors than I would say some of our other counterparties. Historically, I would say people have told us we are more conservative, but we like that. And, we haven't had in the almost 3 years that we've been operating, we've never had a liquidation. We've never had a client, called blow out or blow up.
So no client have been liquidated? Like it's margin call, nothing?
We've had margin
calls, no.
but we're pretty conservative on our margin call. So even in the last 3 years with, heightened volatility, we start sending you alerts. We call your cell phone, you get emails. And again, the benefit of dealing with institutional clients is that our clientele is also tracking us on their end. And all of them have predominantly proactively topped up. And, we've never had a liquidation, and we're very proud of that because not many people can say the same, and that's a very hard thing to accomplish. So it helps me sleep better at night, and I'm sure it helps our clients sleep better at night too.
Yeah. So that industry framework, what was it? C something?
Yes.
Yeah. So basically, you're saying it is insufficient.
It's insufficient today, absolutely. And I think, look, as we see, because again, we always try to bring TradFi into DeFi, but now as we bring some of these DeFi assets into TradFi, we will find a middle ground of how to properly price and underwrite these specific assets. And I think a lot of work needs to happen on both sides in order to figure that out. And that puts us in a really great position because we have a library of assets that we've already underwritten, back tested, and priced. That's very easy for us to share with, folks like CME, CFTC, NASDAQ. And so it puts us in a really good position to be able to have those conversations.
Right. So you may actually be shaping the industry recognition.
We hope so.
Yeah.
We hope so.
Based on what you're doing in the trenches.
Yes, in the trenches.
And what makes, I guess, August Digital different from the other folks in the space? Like, do you have like a secret sauce? Maybe you don't have to reveal it, but like if you were pitching yourself, like you said you've got BlackRock and other names that are clients of yours. How do you attract those versus other bigger names than you that are more, I guess, well known, better known?
Look, I think cross margin is a real key to that because everyone will claim to be capital efficient, but very few can actually do that at scale across all the different venues that you're currently trading. Historically, what we've seen is people can only unlock cost margin or capital efficiency against maybe a portion of the venues you trade, not majority of them. And it is a really hard question to solve and one we've spent a lot of time working on. So I would say that is really our core differentiation. And then the next is the technology itself. We have really prioritized security across transparency. And I think now that the institutions are really coming into the space, they really value the fact that, they can choose exactly how assets are used, where assets are deployed to, different risk levels, LTV levels. They can take our, call it underwriting framework and they can adjust it based off of what they'd like to do with it. And so I think we have that library of data in addition to security. So I would say those are the three things, really the cross margin, the infrastructure, and then the data that we've been calculating over the last 3 years that we can share very easily.
Yeah, I think it's always good when you know what your competitive advantages are. All right. So one thing, you work in finance. One thing we've been trying to do is poll our guests and see what their price predictions are, if you're willing. What do you think Bitcoin is going to look like at the end of the year?
Yeah, so look, I'm not as bullish as Brian Armstrong, who I think came out with the 1 million mark this morning for 2030. We have a ways to get there.
2030, I mean, you might as well be that's an eternity. Let's talk a little bit shorter term.
Out there. But I would say, look, we're I think around 112 right now. I used to have a hat for 100K, and when we crossed that, I told myself I would get myself a 200K hat. But
when's that coming?
When is that coming? I don't think we'll get there by year end. I think we have more room to come down before we go back up. What I've heard at least is, there are folks in the OG crypto community, Bitcoin community that haven't necessarily liked that Bitcoin's going more mainstream, that MicroStrategy and BitO hold such a large portion of Bitcoin, and there is centralization risk with those two players. So I do think we'll see lower before we see higher. But I would say we'll probably by year end, my take is 150K. So, not as maybe bullish as your typical 250 plus. But I think we'll see volatility, and we like volatility. So that makes me happy.
How about in terms of the cycle? A lot of people are saying there's for a decade, you got the 4-year cycle. People are saying this year, this cycle, maybe we have, end of this year, early next year. Any thoughts on, is there a super cycle?
Yeah, so I would say this cycle has been very different than most because you've had asset appreciation, but volatility is at its lowest it's been in, call it a year plus. And so the typical strategies that would have made a lot of money, whether you're options trading, whether you're basis trading, hasn't been as profitable as it has in recent years. And so I actually think when people say, hey, we're in the bull cycle, we're kind of in just the asset appreciation cycle where, Bitcoin has been inching slowly up and to the right. And you've been seeing the same because of the digital asset treasury purchasing of the underlying assets. And so I actually don't think we've actually hit that core bull cycle we're waiting for that we've seen with the blue chips, that we saw with, the meme coins. And there hasn't been that narrative yet that's been driving the next, bull cycle. And so it really, unfortunately, I think it really depends on how well the risk, going back to risk, I think it really depends on how well the risk is mitigated for DATs. If it's not mitigated well, we will see a bear before we'll see a bull. But if it is, then hopefully we get, another narrative that brings us into, a true bull cycle that I just don't think we've seen yet.
Yeah, very interesting take. Sorry, Frederick.
Yeah. So last question that I'll ask you is, we're live here in South Korea at Korea Blockchain Week. Have you seen any projects besides, August Digital? Any projects that excite you or any other projects anywhere else that you're excited about in crypto?
Yeah, absolutely. I mean, there's a long list of them. I would say, first of all, a huge shout out to, Korea Blockchain Week for organizing this event. The regulatory environment in Korea has changed drastically, and they've been at the forefront. Folks like HashVC, a big shout out to Francis and Sung, who do a lot of work to meet with regulators on a daily basis and have the conversations to try to open, Korea to other, protocols and blockchains. Korea is, pretty relatively closed off. And so it's hard to get that, users that access outside of exchanges. And so they've done a predominantly great job. And then, of course, the blockchains. We work very closely with Sui, and so very excited for them. Dojo S Chain, we're also working with them pretty closely on the Upshift side. And so excited for their launch. I can go on, but I would say those are kind of the two I'm most bullish about. Very, very excited. But, the atmosphere is fantastic. You get the excitement in Seoul that you really don't get in a lot of other cities. And so really excited to soak that in this week.
And where can people find you if they want to get in touch with you?
Sure. So, you have both August. On the August side, it's augustdigital.io. We also have our Twitter, which is less active. And then for Upshift, that's very active for us on Twitter. It's upshift.finance. And so you can find us on both sides.
All right. There you have it, folks. Sya Kantorovich, CEO and co-founder of August Digital. Sya, thank you for joining us on the show.